The U.S. tariffs are expected to rattle the Canadian economy. Some experts suggest that if those tariffs are in place for any extended period of time, it could push Canada into a recession. Joining us to talk more about the possible effects is economist Kevin Page, the CEO of the Institute of Fiscal Studies and Democracy. Kevin, I appreciate you being with us. Give me two outlines here, your short-term and perhaps your longer-term. Short-term being maybe the immediate week, what happens to the economy, and then further on if these tariffs remain in place.
Yeah, so short-term, I think the best analysis, Alan, that we have is probably from the Bank of Canada. Yeah, it means that relative to what people were projecting before, we could lose 2 to 3 percentage points of GDP. Each percentage point of GDP is a little over $30 billion for a $3 trillion economy. So we were hoping to kind of grow roughly in the 2% range in terms of real GDP growth in 2025. Now we're probably looking at something that would be very flat. Really almost no growth relative to 2024. And that's a significant loss of output. Like that's in the $100 billion range, even on the size of our economy. So that's a very significant hit. We'll see it in terms of lower exports and lower business investment and lower consumption. I think the longer term, it's kind of harder to predict because we don't know how long this is going to be. But if it's protracted, I think that Canada is really entering kind of really like some fundamental structural change with respect to trade and trade infrastructure.
Yeah, when we begin talking about that, we've talked forever in this country, it seems like, about breaking down interprovincial trade barriers. They're not just going to go away overnight just because we have U.S. tariffs. So if these tariffs are protracted, I mean, what's your sense in terms of how Canada can restructure its economy to withstand something like that?
Yeah, so it's going to take time. To your point, Ellen, it's not going to happen in a few quarters, a number of months. It's going to take years to adjust. I think what we're hearing just from the reaction from different premiers today. I was just listening to Premier Ford's press conference. Again, that issue of we need to move quickly. I think it take advantage of the fact that we have this, this sense of crisis in the country, that our political leaders are coming together at all levels of government. I think we need, this gives us an opportunity to move much faster. But to your point, even taking down those interprovincial trade barriers, that will take some time to have the full impacts. Trade diversification is going to take time. So again, this is going to hurt in the short term, and then we're going to have to be patient that these changes are going to take a few years. We're going to need support from the government in the meantime.
I think for a lot of people, this is all kind of esoteric. I mean, they understand. We hear our leaders saying that this is going to cause pain to the Canadian economy. If you work on an assembly line, you can see how quickly that's going to impact you. But if you're in some other sector of the economy that is not directly related, you can't see eye to eye, you can't see directly how the tariffs will impact you. Can you give us a sense of how this will trickle down to the average Canadian?
Yeah, so again, that's a nice way of looking at it, Alan. So like if you're in the automobile sector right now, you've heard from Premier Ford that it could literally be weeks before we see plants really starting to shut down. So there's very quick impacts. If you look at the size of our economy, how much of it is goods, how much is services, how much is tradable, there's a lot in the Canadian economy that is not completely tied to the U.S. economy. So we'll keep going. And so there will be a lot of people in the service sector that won't be directly impacted in any significant way, potentially higher prices through the retaliatory tariffs. And the indirect effects of some of our Canadians that are more on the front lines. Yeah, and again, it's just kind of a complicated rollout strategy that we're going to need from the government. And I think citizens are going to want to hear what is that plan year 1, year 2, year 3.
If we're talking about substantial support from the federal government, I mean, we saw worldwide what the impact of massive government support was during the pandemic. We saw what happened to inflation as a result. We have it seems, turned the corner on tamping down inflation. Now, a potentially new round of government support. Is that, in your estimation, going to fuel inflation again?
Well, I think the real concern is, yes, it's kind of a stagflation in the sense that we could see, when we look at how much the U.S. could hit us in terms of higher prices, particularly these retaliatory prices, We could see another half point to the inflation rate. Right now, it's just a little under 2% on a year-over-year basis. That can go back up to 2.5%. But I think the output decline that we're going to get because of the loss of exports, because of the loss of business investment, that's going to dampen price pressures. But I don't think we're talking about anything that's like COVID-related supports where we put hundreds of billions of dollars into fiscal supports. I think, Ellen, this is going to look more like 2008, 2009, where we had a recession on a year-over-year basis. Maybe we're down a little over 4%, on an annual basis, about 2%. We had about a $40 billion 2-year fiscal support package. So it's much smaller in terms of the quantum, because of the nature. This is not a global pandemic. This is a trade war. There's an enormous amount of uncertainty, but the overall impacts are not going to be like COVID.
Kevin Page, great talking with you. Thank you so much for your time.
Good to be with you, Alan.